What's going on, everyone? Happy Super Bowl Sunday. I hope we don't go to war, but if we do, it would be an honor to do that with you guys. So in today's video, we're going to go over the broad market. We're going to go over Bitcoin and what I think could end up happening now in terms of the correlation with Bitcoin and the SPY. And then we're going to talk about the 30-year bonds and the large tech stocks. All right, so without further ado, let's get started with the video. All right, so let's start with this. So Monday, tomorrow at 11 a.m., there's going to be a meeting with Bullard. So if you remember, Bullard was initially the person that, as the SPY was skyrocketing over here, Bullard said that he wanted a 100 basis point interest rate hike by July. And then the rest of the Fed members, a portion of them said, you know, there's no reason to be that aggressive for a 100 basis point hike. So everyone that was short that night, we ended up opening green. So now he is going to give a speech at 11 a.m. Monday. And then on Wednesday at 2 p.m., FOMC meeting minutes are coming. And then for the rest of the week, there's going to be a lot of different other basically emergency meetings from various other Fed members. Bullard speaks again Thursday. 5 o'clock, another member speaks. And then Friday, there's a few other members that speak. So next week is going to be very, very interesting. And obviously, there is a lot of news in terms of the escalation for Ukraine and Russia. And as you know, Americans were told to evacuate out of Ukraine. And President Biden said that we wouldn't go and rescue any Americans that were in Ukraine if Russia were to invade. So the situation there is, apparently really, really getting close to seriously escalating. All right, so now let's look at what can happen now next in the market. All right, so clearly on the SPY, number one, the MACD looks like it's about to cross down below. So what I was saying was extreme strength turned into extreme weakness. This is what is basically going down. So essentially, the next levels of support on the SPY are going to be 438 and then this 435, 434.75 level. Because currently, when we do break down below on the MACD, it means that the indice is also going to break down. So we can also see that the RSI is showing tons more weakness to the downside. It basically shows that there's a lot more room to the downside. Next week can potentially be a very, very scary week because essentially many people are going to be expecting the Fed to be hawkish. And that is not obviously going to be it's not going to do well for the stock market. So definitely it's going to be a time to be very, very patient because literally any sort of news is going to either propel the market upwards or bring it down. So if next week Russia decides to not invade Ukraine, the market's going to pump up. If next week we have some news from the Fed saying, oh, we're not going to increase the interest rates, extremely blah, blah, blah. If they say any of that stuff next week, the market is going to pump. The inverse is also true. If they say that they're going to be aggressive, if they're going to have an emergency rate hike, if any of that stuff, the market's going to tank. So it's very, very driven by the news at the moment, by the news and tweets. So we have to be very, very just patient and wary of the situation that we're currently dealing with. Unless you're day trading with multiple day trades in your account, right? Because not everyone is trading on a cash account. And then not everyone is trading on a margin account with more than 25K. So you have a fixed number of day trades per week. If you're taking trades during the day and you only have 3 day trades a week, in my opinion, obviously I'm not your financial advisor and this isn't financial advice. That is very, 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 very dangerous. Because if a setup looks very, very bullish the first few hours in the day, and then we get a tweet saying that the Fed is doing something the market tanks, you end up losing all of your money. So that's not worth it. All right. So definitely we need to be patient. That's basically what I'm going to say. The indicators are showing more downward movement, right? So 438 and 435 are going to be the levels of support for the SPY for tomorrow, right? And obviously then the levels of resistance are going to be 443.30 and then this trend line. If for some reason we end up getting bullish news and we reclaim this trend line here, that's going to be super, super bullish. And then we want to see like another, you know, a retest of this level after we break above it. And then, you know, continuing onwards. But I'm not sure if that's going to happen. And personally, I did buy into NASDAQ calls because we were down about 3.6% intraday. And I wanted to alert it. But then the NASDAQ had jumped already like 3 points. So I didn't end up alerting those calls. But personally, I think we're going to open up green on Monday. But then we're still very, very... This isn't a good time to really take any positions overnight until we get like clear, dignified closes above or below levels of resistance and support, especially not over the weekend. So, you know, that was another thing. So what I wanted to look at was the SPY, the sentiment currently. It reminds me a lot about September into early October. So again, you know, we called this bottom over here. And I was, you know, vehemently talking about being long this entire time. And it worked out. Now, the sentiment, the feel of people on Twitter, the feel of everything is very, very similar to here because it's a mixture of bulls and bears. All right. A huge downward move will not happen unless the majority of people are complacently bullish, all right? And a huge upward move will not happen until the majority of people are complacent that we're going to fall. So right now, the sentiment is basically kind of in the middle. I see like a lot of people are like 50-60% of people are bullish, like, you know, basically half and half bulls and bears at the moment. But as you start seeing more sentiment push towards one extreme, usually what ends up happening the opposite. So we need to be wary about that. And we can easily come back and retest these 430 levels. I don't see why not, especially if the news continues coming out bearish. Yeah, that's really it. But then once sentiment, guys, listen, once sentiment becomes very, very, very bearish, once everyone is like brainwashed into thinking that the market is going to fall, do not fall for that. All right? Do not fall for that trap. Right now, the sentiment is not as extreme as we need it to be. So remember on Thursday, there was a big drop and I bought the dip twice at 453 and then at 450. Clearly, we had a big drop on Friday, but it was not a good enough reason to go long. Because obviously, you know, we have to learn from our mistakes. And essentially, there was still more room to the downside. But right now, just wait. In the next few days, maybe the next week or two, sentiment is going to become, in my opinion, it's going to become very, very bearish. Could, right? It could become very, very bearish. That would be the best time to go long. Because once everyone snaps in their head, because also you have to understand that bears were very short, right? They were short Thursday, but then we ended up, you know, moving upwards a bit on Friday. So a lot of people ended up losing a lot of money also that were short. So again, this is like a choppy market where they're trying to make retail lose money. Until there is a clear defined direction in terms of sentiment, for the masses, usually the reverse happens because the masses are never right. All right. If the masses are completely all bearish, why would banks and hedge funds want to profit alongside the masses? That would never happen. All right. So, and it hasn't happened ever in the past like few years, whenever retail is super bullish, the market ends up falling. When retail is super bearish, the market ends up pumping. So just keep that in mind. There's my analysis for the SPY. Let's go ahead. 10 minutes. Let's go ahead and take a look at the IWM. All right, so here's a chart of the IWM. All right, and we can see that there was an uptrend on the IWM, and we can clearly see that broke. All right, but it didn't break as aggressively as, it could have been worse. So essentially, the IWM did hold above 200. If we break down below 200, then 197 and then 195 are going to be the next two levels of support. You can see the RSI is barely falling right now. And that means that the fact that it's barely falling like this means that there can be a huge dip to the downside, because the RSI is still holding up, yet we had a big red day like this. So just be careful, all right? It's not worth being super long or super short, because right now the RSI is showing strength. The RSI is showing like weakness in terms of this, but it's holding up, and we did close above support. So it's not a complete disaster, is what I'm saying. But now, when you look at the MACD is still nowhere near being crossed down below on the yellow MACD line to make it oversold. So that means that we can very easily come back and retest 195. By that point, maybe the MACD would become oversold, and then we need to monitor what happens with the RSI, because if the RSI is still just barely creeping down below like this after a huge capitulation to the downside, that would be amazing, because then everyone would become very bearish. And another really cool thing that's happening now on the SPY and the SPY, we just saw it, and the IWM, is that the Bollinger Bands are starting to tighten up. All right. So when the Bollinger Bands tighten up, there is usually a very aggressive move to either the upside or the downside. And if you've been watching the video, that move ended up happening to the downside on the bonds. We were showing the Bollinger Bands tightening, and the bonds ended up falling lower. So if we get a tight Bollinger Band here over the next few days into the next week or two, we can see an aggressive move to the upside or the downside, and things are going to be really fun to end the month of February. But currently, the technical indicators are super bearish. And it looks like overall, yes, we could open up green on Monday. That's completely fine, whatever. But if we break down below 200 on the IWM, because the IWM was the leader, so it's been leading the SPY and the NASDAQ in terms of strength. So the SPY and the NASDAQ has been keying off of the strength of the IWM. So if the IWM starts to crack down below major important levels of support, then the SPY and the NASDAQ are going to fall much heavier. And that's not going to be good. So essentially, that is really it for the IWM. 200 needs to hold. And I'm not even really, the upward resistance for Monday would essentially be like 204. If we can close above 204, we will claim this uptrend level. So just keep that in mind as well. If we close above 204 on the IWM, then we have reclaimed the uptrend. And that would be very interesting. We'd probably go long the IWM for swings into Monday, because on Tuesday there isn't huge news. I'm gonna re-look at everything, but if we reclaim this uptrend, it's going to be a safer time to go long overnight on the IWM. So there's that for the IWM. Now let's go ahead and take a look at the large tech stocks, the 30-year bond, and the NASDAQ. All right, so here's Apple. This is one of the reasons why I felt comfortable going long on the NASDAQ. We held this level of support, 168.34. Obviously, we broke down below this bull flag like perfectly, and but we held this level of support. So that was a good sign. If this breaks, we can easily come back and retest 165 and then 163.76. So just keep that in mind. All right, so that's Apple. Let's take a look at Microsoft. Microsoft broke down below everything. Microsoft moves much more aggressively, right, to the upside or the downside usually. So we broke down below 298, and the next downward targets are going to be essentially 292, and then then things can get really, really messy. But again, you can see that the tightening of the Bollinger Bands are sort of happening now on Microsoft. But if Microsoft starts breaking down aggressively, then that could be a sign for the rest of the tech sector as well. Let's take a look at Amazon. Let's take a look at Microsoft's MACD. So the MACD on Microsoft is now aggressively oversold. All right. So you can see that there is potential room to the upside for a bounce. All right. Now, going back at Apple, Apple's MACD is also oversold. So that's a good sign. The yellow MACD indicator showing the overall momentum of Apple is going upwards. But yet the blue MACD line is oversold. So it means that, yes, we could have another day potentially of downside, right? But it's a good signal that this is now oversold. Does that make sense? It means that we can cross back above and have a bullish crossover, and that would cause the market or Apple to essentially bounce a bit. So now taking a look at Amazon. Amazon is the complete opposite. Amazon's MACD is still overbought. And it's not as pressing right now because Amazon had a huge run up into earnings and like a big move. So the moves are going to be much more aggressive. 3,000 is essentially the level that needs to hold. But technically we did close below 31.28. So Google, similar situation as Amazon. Obviously, like, it had a huge run up. And if Google wants to load, that would be spectacular. All right, there you go. So you could see that obviously we had a huge run up, but it held sort of at support at 26.58, and the MACD is oversold. So Google and Apple were sort of above support, and Apple, Microsoft, and Google's MACDs are oversold, which means that there is a potential bounce to the upside. All right, so this level needs to hold as support, 26.60. We could quickly take a look at Tesla as well. Tesla, wow, bro. I really would love if Tesla falls to like 780. Oh my God. I want Tesla to fall to like 700. So we can, oh my God. That would be delicious. Personally, I just want the market to really, really crack down below all of these large, amazing, large, beautiful companies. I just want a nice capitulations to the downside so that we can make our lives super, super easy. Make all the bears happy. Make us happy because we'll buy the dips. Yeah, oh my God. Like, it'll be amazing. But of course, right now, Tesla looks very, very bearish. We filled this gap. We did close right above the gap right here at this high at 857.50. So, but the MACD is still showing more room to the downside, and the RSI is also showing that there's more potential room to the downside. So if Tesla breaks down below this prior low here at 792, that would mean that the NASDAQ and everything else is still continuing to fall. And that would be pretty amazing because then we would be very overextended to the downside. All right, so there's that. I'm just very excited to see extreme movement in the stock market because there's always amazing opportunity. So those are basically large stocks. We can also take a look at Facebook. So Facebook, we were long it a few days ago. We caught this bottom at 217. But now, so we caught this bottom at 217, right? We sold, I think, the next day or the day after or something like that for like 40-something% on the calls. But now, this is really, really bad because before, when we bought the dip, the MACD was extremely oversold. Okay? Now the MACD is about to cross over, yet we see extreme like weakness in the stock. So that is terrible. Like, that is very, very bad. If this level doesn't hold, if this low right here at 216.15 does not hold, this could be very, 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 very bad for Facebook. And especially if the stock continues falling, yet the MACD moves upwards, that would be devastating in the short term. But then if the MACD continues skyrocketing and becomes very, very overbought, eventually Facebook could follow and then, you know, start filling the gap. But yeah, man, just I would love to see Facebook really, really capitulate a bit lower, and then we'll most likely buy the dips intelligently, right? And another thing that we need to look at is the Bollinger Bands are really, really falling to the downside. And when the Bollinger Bands fall like this so aggressively, it's not a good sign. It means that there's still a lot more room to the downside before we become algorithmically overextended to the downside. So when you looked at the other indices and the other stocks that I just showed, the Bollinger Bands were not completely vomiting to the downside, which means that, you know, the bounce is closer to come. But with Facebook, it's just a free fall. So yeah, man, I just want you guys to see that. All in all, I saw the strength in the MACDs for Apple, in the MACDs for Google and Microsoft, and I saw that they were oversold. So now let's take a look at the 30-year bond. And the 30-year bond also held basically this level of support at 150.21 and had a huge green day. We were outside trading below the Bollinger Bands, which is obviously an overextension to the downside. The RSI is moving upwards, and the MACD also, I mean, the MACD still looks pretty bearish. MACD looks pretty bearish on the 30-year bond. But of course, any sort of news is essentially going to cause the 30-year bond to bounce a bit. So right now, yes, we did have a big green day on Friday into the close. And the MACD is still, technically, it's oversold. So we could continue going on higher if we close above 153.07 and then 153.30. That could be a good sign that the market would have a intermittent bounce, which is another reason why I wanted to go long the NASDAQ. But I didn't alert it because it was like literally it's just a complete gamble. And the goal is to just be intelligent with trades, not be super greedy. So, I mean, I'd rather just wait for a much better, clear, defined position to go long and not, you know, cause FOMO and all that other stuff. So, the bonds can still continue falling a bit lower. If these resistance levels fail, we can easily break down below 150.21, and then we could just continue falling lower. So just be careful on that. And there's that for the large tech stocks and the 30-year bond. Go ahead and take a look at the NASDAQ. So the NASDAQ clearly broke down below this bull flag, right? Obviously. We closed right down below this 23.6% fib at 347.38. The main support zones for the NASDAQ are going to be 338 to 341, essentially. If that does not hold on the NASDAQ, that would be an amazing, like that would cause the market to tank below this 334.15 level, in my opinion. And but we can see that the Bollinger Bands here are close, right? It's not as bad as Facebook's Bollinger Band. They're right here below, and the top Bollinger Band level is quickly falling lower, right? You don't see a huge vomit to the downside like we saw in Facebook. So that means that there is potential that we're going to end up bouncing soon, right? And you could also see that the MACD is much closer to being oversold than the SPY's MACD and the IWM's MACD. And what we did the last time we had a very, very disgusting red day, if you remember, we fell right here. We fell from February 2nd to February 3rd. There was no real reason to go long, except the fact that we were down. How much were we down overnight here? We were down like 4%. Yeah, so we were down like 4% at the close, and I alerted longs. And it was very similar to basically what happened at the close of Friday. The reason why I alerted longs at that day was when we are basically above 4% red on the day, it's almost impossible that the next day won't be green. If any time in history you could go and look at any day that we were down like 4%, the next day is usually always green. So for example, if the NASDAQ is red 4% at the close, right, for the day, if you buy calls at the close, I don't think I've ever seen a day that the NASDAQ the next day isn't green. So the reason for that is because when you have extreme downward extremities, a bounce to the upside is inevitable. So I took a stab at that for over the weekend. Obviously, that could have been completely wrong because war, so I didn't alert it. But that was my thought process of why I wanted to buy calls for the NASDAQ overnight. So I hope you guys like learn my thought process behind that. And obviously, when we did go long everything, we, made a lot of money on everything that I alerted. And currently, we did technically close below this level of support. The RSI still has more rooms to the downside, and this MACD is still not oversold yet. So we could fall even lower, come back to this level of support zone here. Not sure why it's not showing, but come back to 341 to 338, and then we need to see if that level holds. All right, so there's that for the NASDAQ. I'm not sure what's going on, but how you want to show. So there is that for the NASDAQ, right? And overall, I'm holding a bit of calls overnight for a bounce Monday, but then next week is going to be very, very turbulent. But then another reason why it could be a potentially good sign is Bitcoin. So, of course, Bitcoin trailing upwards was a reason why we were buying dips at the end of January. And I'm going to show you guys another reason why I think now the market could be a bit of a better buying opportunity here. All right, so now let's go ahead and take a look at the crypto market. All right, from a technical standpoint, what are the things that look bullish right now on Bitcoin? Number one, I give you guys like a second to answer, but I didn't really specify that. So anyway, yeah, so number one, the MACD is oversold. All right. So whereas the SPY, the IWM, and the NASDAQ's MACDs were all still overbought, all right, the MACD on Bitcoin is now oversold, which means that, there is a potential now that we could bounce up, all right? And we can see that the yellow MACD line is above the 0 level, which means that momentum is pointed upwards. And now the blue MACD line is down below it. So that means there could be a bullish crossover and a bounce, okay? So the level that would need to hold on Bitcoin for that to happen is this level right here, which is the low right here at approximately like 41,000. If 41,000 holds, obviously this is going to be a very, very tight invalidation here. But if 41,000 holds, and all right, so say for example, we fall lower to this trend line here, and it basically coincides with 41,000 level, right? That would cause the MACD to fall a bit lower. And then if we can bounce off of this level here, that would, in my opinion, be very bullish for the overall market. Because if Bitcoin shows like basically Bitcoin, since it's trading 24 hours, and now that hedge funds and banks are really allocating a lot of their funds towards Bitcoin, etc. A lot of the indicators and everything are going to be basically the same or very similar. All right. A lot of the algorithms and everything, obviously it's not as much dollar volume, but the indicators and everything that they'll be using to determine whether or not something is a good buy or sell opportunity are going to start being much more similar. All right. And right now the MACD is oversold. Whereas if you look at the SPY, the MACD is overbought. You know, how was everyone's day? Okay, so the MACD is overbought, right? So it means that if, you know, it's basically like a forward. It's basically telling us what could happen in the future. So if Bitcoin can hold 41 and this MACD starts to curl upwards, that would be very, very bullish for the overall stock market, period. All right, so now just look. So we have to monitor Bitcoin. If Bitcoin can hold above 40 to 41 and it starts to bounce, that is basically a signal to essentially start going long the rest of the market. And then the very important level of resistance for Bitcoin is going to be this level here, approximately 44,000. So now if 44,000 can break to the upside, you know, we could see a retest of 45,000. And also very similarly, the Bollinger Band to the downside is squeezing upwards, which is a really good sign, which means that even if we fall lower, the Bollinger Band would have came much higher by that point, and the downward move would not be as aggressive as the potential for the downward move on Facebook. All right, so there's that for the entire market. I hope I gave you guys a good outlook of what could happen in the future in the next week or two. And you know, if you guys enjoyed the video, make sure to follow, like, subscribe, do all that good stuff. And I will see you guys tomorrow. Thank you.